Hello, my name is Kara Lowrie. I am with Acadiana Mortgage here in Bossier City. I have been a local lender for over 3 decades. And with the amount of expertise that I have on VA loans, I am considered to be a VA specialist. And that matters in today's time because there are a lot of people that claim to have a lot of information, but unfortunately, they don't stay on top of that information, or they're just Googling it to try to find it. Of course, there's a lot of information online, but also what happens there is people don't update their data online. So it causes issues with giving out wrong information, of course. So my ultimate objective is to make sure when I am having a consultation with a client is that they walk away with several different things. They're walking away with clarity, with confidence, and with actionable steps so that they know how to proceed. They have a plan. What I find quite frequently, and I have found throughout my entire career, is that there are some very specific myths around VA loans. One is that VA loans take forever. Well, in the old days, which again, I got in the business back in the early 90s, they did take a really long time. The process back then was very, very, very different than what we have to do today. So, as an agent acting on behalf of VA and as a lender, we control almost all of the process within our business and within our walls, or we're accessing VA assets via online through VA websites and so forth. So the amount of time that it takes to do a loan. So one of the biggest differences is the appraisal. So a VA appraiser has 10 business days to actually do the appraisal. So that's a little long, but it's a window, right? So they can do it sooner than that, but the VA gives them 10 days in order to do it. FHA, rural development, conventional loans, those typically come in uh, usually around a week to a week in 10 days. So, but the beauty about a VA loan, especially with our company, is that we do not have a lot of lender overlays. So we underwrite pretty true to what the VA regulations call for. So I'll give you an example. It is very common for me to get a phone call from a realtor that says, hey, I've got this deal working with this other lender. They're telling me that this VA guideline is preventing this loan from moving forward, preventing us from closing. The very first thing I do is find out what that is. Is it actually a VA condition or is it a lender overlay? I find the majority of the time when I get those types of phone calls, it is actually a lender overlay that that particular company has actually put on the loan itself. So as far as the time frame goes, the other thing is in reference to communication. As a lender, you are dealing directly with me and my staff, not a call center, not someone 10 states away. It's someone that is within my walls that I can go and talk to find out if there's an issue, if there's a problem. Hey, give me a status. So no direct communication. You can get the same person every time you call. So that also provides a lot of clarity. It provides a lot of continuity, and it makes people feel good that they're talking to the same person each time. So before the federal government put the new federal regulations in place about what we call TRID, T-R-I-D, TRID requirements, I literally closed a VA loan in 24 hours. Now, everything had to fall in line. The appraiser did it really quick. The title company did the title work really quick. The buyer was a slam dunk. Even still, that's all we did for that 24-hour time frame. Now, the soonest that we can actually close any loan, whether it be VA, FHA, rural development, or conventional, is actually going to be 10 days. So it says from the time we give them the disclosures, then we have to give them 10 days. So it can be done fairly quickly. Typically, They take about 30 days, but I will tell you why. Typically, you write the contract, and right after that, you do your home inspection. Home inspections are taking about a week to 10 days to get done. Then that is typically when we order the appraisal, is after y'all have negotiated any type of inspection items. So you see, VA loans don't really hinder the process at all. Everything is usually kind of hung up on that home inspection being done and then the repairs being done. So myth number 2, sellers don't like VA loans because of the appraisal. I will have to tell you that that is a common question or comment that I received, but it is an uninformed comment or question, because sometimes, a lot of the time, it's really the lender that is creating a problem and not necessarily the VA appraiser. Now, don't get me wrong, appraisers are a different breed, 100%, but sometimes, because VA guidelines on appraisals are actually very clear, and that to me is what causes the issue at times, because they are very regimented on certain requirements that they require in the appraisal and certain things that they want and certain parameters and guidelines as far as distance of comparables and different things. So ironically, they are more concise on appraisal requirements. Appraisers don't have as much latitude as they do on other types of loans. So ironically, it sometimes comes back that that VA is more strict. They're really not. They just want to make sure that the veteran is protected ultimately. So myth number 3, the veteran has to pay all these extra fees. Well, so really 3 main classifications of money whenever you're buying a house. One is the down payment, which on a VA loan, there isn't any unless you decided that you wanted to make one. Number 2 are your closing costs. Those are basically my fees, the title company fees, all kind of combined. And then that third thing are what you call your prepaid items. That's your 1 year of homeowner's insurance plus 2 months plus 2 months of taxes. The information and the amount, the dollars that are put into your escrow account. So on a VA loan, the seller can pay all of that. They can pay all closing costs, all prepaids, and 6% of closing costs and seller concessions. So they actually can pay quite a bit on a VA loan. So let's talk about the VA funding fee just real quick. So the VA funding fee is the only, what I would say, is a negative to a VA loan. If you've used your VA before and you put 0 down, your VA funding fee will be slightly higher. But here's the thing, VA allows you to finance that completely back into your mortgage. So that means that the down payment, there is none. The VA funding fee, you're financing back in, assuming that you have one. And then the closing costs and prepaids, if the seller agreed to pay for those, y'all, it's very common to go to closing and the buyer actually needs 0 money. Your realtor is also very critical, so that to ensure that they understand VA loans, that they understand how to negotiate, because sometimes that's more of an issue than actually being a VA loan. But myth number 4, you can only use your VA loan once. That is a very common myth, and it is completely inaccurate. And it's inaccurate because VA says that you can use that VA loan over and over again. Not only can you use it over and over again, but you can actually have more than one VA loan at a time, which I've done lots and lots of those through the years. So the advantage to that is let's say that you've bought a home and it was your first home, and then you've gotten married, you've outgrown it, the in-laws are moving in, the parents are moving in, you need more space. So if you have enough eligibility, and depending on the price of the next home, you could keep the home that you have and use your VA to buy your next home. Keep in mind, VA's ultimate intent, their ultimate motivation, is to help you as the veteran get into a home with 0 down, with as much flexibility as they possibly can muster, but they also want to make sure that it's a sound loan. So yes, you can use your VA over and over again. Let's say you did buy a house with your VA and you decided that you wanted to buy a much bigger home the second time out. You may have to sell your first home in order to qualify and or have enough eligibility for the next home. The key is having a local mortgage expert who can navigate all of that with you, who can navigate the nuances and determining whether you have enough eligibility or not. It really pays to have an expert who can help you with all of that. So it can be a very huge opportunity by not having to sell before you buy your next one. So myth number 5, that you need big credit and big reserves in the bank. Absolutely not true. VA is very flexible when it comes to credit standards. The minimum VA credit score with our company is a 600. Now, that doesn't automatically mean that you are going to be approved, but what it does mean is that if you meet that initial parameter of 600, then it's very likely that you are going to get approved after that. But keep in mind, what is a credit score? A credit score is an algorithm that is used to predict your willingness to repay the debt. So the higher that credit score, the higher the likelihood that you're going to repay the debt. So if you have a 600, then that means you either have low credit, no credit, or you have a lot of derogatory items on your credit report, typically. But when we start with the pre-qualification stage, I am going to advise you and let you know what you need to do in order to increase or enhance your chances of being able to qualify later. So again, helps to have somebody local, helps to have somebody who actually spend the time and talk to you. And it is imperative that you're talking to somebody who is familiar with VA loans. I get horror stories all the time. I had someone who called me a couple of weeks ago and they had been denied by a prior lender because they said VA would not allow them to do a loan based on their credit guidelines or based on their credit history at the time. That was absolutely not true. I can't say the ultimate motivation of why that lender told them that they didn't qualify, but it was not even close. Like, they qualified all day long. So pays to have somebody knowledgeable about VA loans, because VA guidelines are built to help real military families win and starting to build generational wealth and putting a roof over their head, getting them started. Of course, there are so many nuances to military life, the constant moving. Do you have a house in another state? What is going on with it? So please make sure that you're talking with someone who knows about VA loans. Okay, let's talk about myth number 6, that VA loans are only for first-time home buyers. So the first time you use your certificate of eligibility, the VA funding fee is one amount. If you make a down payment, then the amount of that VA funding fee percentage actually drops down. Either way, no matter whether you do zero down or you make a down payment, VA still allows you to finance back in that VA funding fee. So anytime after that first time, VA classified it as what is called subsequent use. The VA funding fee amount goes up, assuming that you have one. So, so if you have someone that has purchased a home and then they decide that they want to buy another one, then they could have a VA funding fee on each one of those properties. So if you have someone that is getting ready to buy a new home And this is a very common question as to whether it would be better to do conventional or VA. It's real hard to beat a VA loan, but every now and again, conventional does win out. So if you were doing a VA loan or wanting to do a VA loan and you had a big down payment to make and you possibly have really high credit scores, then it might be a better option to look at doing a conventional loan. We would literally work up the scenario of conventional and VA based on the parameters that you have said that you wanted. And then I would work all of that up, get back in touch with you, and then give you that information so that you and your family could make an informed decision on which one would be best for y'all. So it's all about trusted resource, trusted advisor, but then giving you that information to help you make a decision. But ultimately, it is totally your decision. So VA, if you have VA entitlement, like I said, it's real hard to beat a VA loan, but sometimes people are talked out of it simply because the loan officer doesn't know what they're doing. They don't know how to do VA loans, or maybe they're just not competitive in the market in reference to interest rates, and they know it and they just don't want to do them. So don't let anybody talk you out of using your VA loan unless they can show you on paper why it's better to go the other route. And then even if they tell you then, even if you're not using me for your loan, reach out to me so that we can verify that, even if you're not in my great state of Louisiana. So now let's move on and let's talk about myth number 7, that VA loans are more expensive or have higher interest rates. The expensive part comes from your lender. The lender is the one that sets the interest rates. The lender is the one that sets the closing costs and so forth. Because the title company fees should be about the same no matter what type of loan that you're doing, no matter what state that you're in. The closing costs should be about the same depending on what your lender charges. That part could be different. So when you're thinking about closing costs, kind of segment that a little bit from closing costs are basically the lender fees and the title company fees. So again, title company fees should be about the same no matter who the lender is. Sometimes they can be a little different because some lenders require additional stuff. They require additional coverages. Their requirements are just higher. So you're really starting to see why it is so critical to understand that a VA expert who specializes in VA loans can really make a big difference. And when it comes to interest rates, so back in the early 90s, VA interest rates were they were a good bit higher than what, say, FHA or conventional rates were. However, it hasn't been that way in quite some time. VA rates are super competitive. They are with our company, they are very similar to FHA rates. They're better than conventional rates in most cases because that's how we price them, because we are VA specialists. Majority of loans that we do are VA loans. And so when you're looking at a conventional loan, you have monthly mortgage insurance, but you don't have that on a VA loan. So when you're looking at what's cheaper, are we talking cheaper money out of pocket? Or are we talking cheaper payment? So you have to compare apples to apples in reference to down payment amount, in reference to term. So if you're comparing apples to apples and then looking at it in black and white, sometimes it makes it a little easier to be able to understand that and which one might be better. So myth number 8, my realtor said conventional is better. Sometimes realtors have experience or they have VA training. Unfortunately, most of the time they don't. And they don't fully understand that they come to the relationship with their experience, with their biases, and that could simply be based on the lender that they worked with before or what they've read. or what they've heard from someone that's on their office. That is just not always good enough of an answer for me for the realtor to provide that type of insight as far as financing goes, because they just don't have the training. Not that they're not good people and that they don't mean well, they just don't have the training. And so when I get that question, which one's better, I touched on that a little bit earlier, because better also means different things to different people. Better could mean less money out of pocket. Better could mean a lower payment. Better could mean how much the seller can pay in concessions, because on a VA loan, we already talked about that, VA allows sellers to pay up to 6%. On a conventional loan, the majority of the time for a regular down payment, the seller is going to be limited to only being able to pay 3%. So sometimes that makes a big difference on if in what you can negotiate, because say, for example, on a sales price of $100,000, if it's a conventional loan and the seller can only pay 3%, that is only $3,000. So on a VA loan, the seller can pay up to 6%. So if this is a $100,000 house, then the seller could pay up to $6,000 in closing costs and prepaids. But if it's conventional loan, then the seller can only pay $3,000. So sometimes that can make a difference in also which one means better to you as a borrower. So it's a matter of showing side by side numbers. And then also, more importantly, is advocating for the veteran, because I spend a lot of time educating realtors, educating sellers, even sometimes educating title companies on why things are done. Because ultimately, at the end of the day, we're here to take care of our borrowers. Those are our customers. Those are our clients. So in closing, what every veteran should know before they start. So you've got a quick checklist. So we want to make sure before you're picking out a house, we want to make sure that we've pulled up your certificate of eligibility, which I can do that for you directly through VA's website. We're going to know how much eligibility you have and does it meet the steps and what it is that you're wanting to do. We will have established where your comfort zone is in relation to payment, because if you want your payment to be $1,000 a month, then we want you to know what price range that needs to be before you go out looking for a house, because it really doesn't make sense to do that afterwards, because then you've just got a big mess. So we definitely don't want to do that. So if you want to know more, reach out to me, or definitely subscribe and stay tuned for all of, I'm going to start that part over. So if you want to know more information, reach out. I would be happy to help you on an individual level, or subscribe to our channel, subscribe to our social media platforms so that you can stay up to date on VA information to build generational wealth for you and your family. Talk to you soon.